Funding for Market Journal is provided by the Nebraska Corn Board.
When we transform Nebraska corn into ethanol, it doesn't disappear from the food supply. It just takes a little detour. Ethanol is made from the starch. The rest of the corn becomes livestock feed to create meat and dairy products, corn oil, sweetener, and other food ingredients, and maybe a little carbon dioxide to make your soft drinks fizzy. Homegrown ethanol helps satisfy America's hunger for energy and the world's appetite for feed and food. Nebraska's family corn farmers, sustaining innovation.
Market Journal, television for agricultural business decisions, is a presentation of the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources. Promotional support is provided by the Nebraska Farmer Magazine, and major funding for Market Journal is provided by the Nebraska Corn Board.
Welcome to this week's edition of Market Journal. I'm Jeff Wilkerson. We're coming to you this week from the 2017 Nebraska Power Farming Show at the Lancaster Event Center in Lincoln, Nebraska. On this episode, Josh Maples looks at the slide in cattle markets. Scott Irwin discusses the predictability of crop price cycles. Todd Neeley outlines 2018 Renewable Fuel Standard volumes, and Loren Giesler talks about soybean disease management. Mississippi State Extension livestock economist Josh Maples is our market analyst this week. The last time we talked with Josh was in May, just after the U.S. announced it would resume shipping beef to China. Since then, the United States has exported more than $17 million of beef and beef products to China. Nebraska's shipments account for more than half that total. Data released this week shows American beef exports to all destinations in October were up 13% year over year. Market prices, meanwhile, have slipped noticeably over the last few weeks. With Wednesday's close, the December 2017 live cattle contract sunk to its lowest mark since early October. We started our conversation there when we talked with Josh Wednesday afternoon.
The last few weeks have been a pretty wild ride in the live cattle futures markets, mostly on the way down. So live cattle prices peaked around the first week of November, and since then we've given back quite a bit. So if we look at the nearby December contract, prices got up to around 126 back in early November, but they're back down around 115, 116 today. The February contract, similar story, got up above 130, falling back down to about 119 where we're trading right now. So we've given quite a bit back over the past few weeks.
What things are behind the slide?
Yeah, so I think there's a handful of factors behind this. The concern about lower beef demand after holiday purchasing is finished, is there, and it overhangs the market like it does every year. On the feeder side, I think finally getting some colder weather in certain parts of the country have pushed a few more cattle out onto the market. But really the $10 rally back in early November was a bit of a surprise. And the fact that prices have moderated back from this peak shouldn't be all that unexpected. I think the rally back in early November really led a lot of people to start considering how high prices could actually go, and I think we're seeing a little bit of reaction to that.
Do you think this decline changes the way that producers market?
I'm not sure about that. I think this decline is going to lead to producers maybe being a little more cautious. So if we start thinking about feedlots especially, you look at some of the break-evens for placements right now, those break-evens are not near as profitable as they were not too long ago. And so I think that's going to lead feedlots especially to perhaps consider keeping the cattle they have a little bit longer, when we could see dress weights go up a little bit. But I do think it's going to lead producers to have a little more caution.
The last time we talked, the U.S. just announced it would start exporting beef to China again, and at that time you said in the short term we need to sort of temper our expectations. We're a few months in now. How do you think it's gone so far?
Yeah, so I think it's going about like we expected. So last report that came out, we sent about 1.5 million pounds of beef to mainland China. That showed up on the October report. This was down a little bit from September. September we sent almost 2 million pounds of beef. But in the grand scheme of things, that's still not that much beef compared to a lot of other countries. And so I think it's going about like we expected. This is going to be a gradual process. Markets have to develop both for U.S. beef in China, consumers actually purchasing it, but they also have to develop for the cattle here that meet the requirements for beef to be exported to China. So that's going to be a gradual process, getting both of those markets to evolve and to what's required to see a lot more beef shipped to China.
What do you think the price forecast is here as we close out the year and start heading into 2018?
Yeah, so overall for 2018, I still think we're going to see lower prices, slightly lower. I'm not calling for any kind of crash or anything like that, but we're in a situation where we know that we've got a lot more supplies coming, and we can see them coming through the system, and we see it on the horizon with larger calf crop again this year. So for prices to not go lower, we're going to have to see some increases in demand, and that's what's happened in 2017. We talk about exports, we talk about domestic demand being strong. Both of those things are really good, but if we look at what prices have done this year compared to last year, we're probably going to end up at an annual average at about the same rate. So even with the large increase in exports and even with strong domestic demand, prices this year are going to end up being about what they were in 2016. So if we look forward to 2018 and we know more supplies are coming yet, we're going to have to rely on some increased demand again. And so the question really comes down to, do we think we can continue to improve our exports, and can we continue to improve domestic demand at a pace that can keep up with these increased supplies?
Next week, DTN's Todd Holtman will join us to look at corn and soybean markets. Nebraska Governor Pete Ricketts this week named Steve Wellman the new director of Nebraska's Department of Agriculture. Wellman operates a family farm in the southeast corner of the state near Syracuse and has previously served as the president of the American Soybean Association. Wellman takes over the Ag Department's top spot in place of Greg Ibaugh, who was appointed to a USDA undersecretary position earlier this fall. In its farm income forecast last week, the USDA said receipts from corn sales in 2017 were expected to drop for the 5th consecutive year. The obvious question for many farmers likely becomes, when will prices recover? Economists at the University of Illinois are studying that topic by looking at the predictability of crop price cycles. They believe corn, soybean, and wheat prices have had 3 distinct periods since 1947. In those periods, the researchers see prices move within a range, then revert back to an average price. However, Scott Irwin, one of those University of Illinois ag economists, notes the average price of a period isn't really known until the period ends. We talked with Scott recently to learn how producers could use this research in their marketing plans, but we first asked him to describe the distinct long-run periods of crop price cycles.
The periods that I call eras of grain prices run from post-World War II to 1973, and then from 73 to 2006, and 2006 to the present. And what we have found to date is that grain prices, unadjusted for inflation, tend to move in a range during these eras. And if you're at high prices in the range, you'll tend to revert back to the average. And if you're at low prices, you'll tend to slowly at some point crawl back up towards the average. And that seems to be the pattern. Now, why do we apparently move in such reasonably defined ranges over so many decades until there's a big jump in the average price? No real good answers for that. My own personal view is it just reflects relatively stable supply and demand dynamics. You're talking about generally food commodity markets. They don't change that rapidly. Who's producing them, who's consuming them. So as long as economic growth is not, wildly high or low, we'll tend to bounce around in a range.
Describe the characteristics of the current time period. So when it began, where you think the average price might be?
We don't have the benefit of 30 or 35 years of hindsight like we, had looking back from from 73 to 2006. But it's pretty clear that a new era started in 2006, and we saw a major jump in the average price level. To date, here in Illinois, corn prices, for example, have averaged about $4.50 since 2006. Now, of course, the last 4 years, prices have been much lower. On average, probably something like $3.50. I'm not sure exactly what that average would be for the last 4 years in Illinois, but that'd probably be pretty close. And prices have ranged from roughly $3 to $8 a bushel.
So should you be less aggressive marketing at these prices?
Well, it all depends on your belief. If you believe conventional wisdom, you should prepare and project low $3, sub $3.50 corn prices, basically as far as the eye can see. That is not my view. I will be the first to admit that prices have gone lower longer than I expected when we came off the highs, but I still believe that a projection of an average price for the next 5 years closer to $4 than $3.25 or $3.50 is more realistic.
Given your thoughts then, Scott, where do you think prices will be over the next 5 or so years here, and how do you think that relates to land prices?
Excellent question. For corn, I would use a U.S. average price of $4, for soybeans $10.75, and for all wheat $4.75. Something around those levels is where I think we will end up averaging. Land prices are really interesting. It appears that the people at the margin that are bidding on and determining land values believe my contrarian position on prices. That's at least one way to reconcile the firmness of land values, is that these long-run investors, whether they be farmers or outside investors, are counting on some reversion to averages like that will restore profitability.
If prices are towards the bottom, then what do you think will pull them back up?
Well, I think it will be two things. One that will be slow and one that will be a little bit more violent. The slow factor will be a return to better rates of economic growth around the world and in the U.S. that will largely feed through livestock demand into feed grain and oilseed prices. But the big one, in my opinion, will be a return to a more normal frequency of bad weather in the United States. That makes me sound really doom and gloom, but we've just come off of the best 20-plus year period since 1895 in terms of U.S. Corn Belt weather. And over the next 5-10 years, history says that you wouldn't want to project that we would have such good weather again. And I think it'll be a series in a fairly short period of time of some really poor weather. That'll be the big event that pulls us out.
On the Market Journal website, you can find a link to Scott's article on predictable crop price cycles. The United States produces and exports more ethanol than any other country in the world. In 2016, the U.S. made 15.3 billion gallons of ethanol and shipped more than 1 billion gallons to foreign destinations. Under the Renewable Fuel Standard, the Environmental Protection Agency last week set a target of 15 billion gallons of corn-based ethanol for 2018, part of a nearly 19.3 billion gallon requirement for renewable fuel. The agency also recently rejected petitions asking for a change in the point of obligation, essentially who bears the responsibility of meeting targets. Todd Neeley covers renewable fuels for DTN. He joined us Monday to discuss how the point of obligation impacts ethanol and biodiesel, but we started by asking how the 2018 requirements compare to what those in the industry expected.
I don't think it was a big surprise. I know a lot of people held out hope that perhaps EPA would come out with a set of volumes that are maybe a bit more aggressive, when we talk about cellulosic ethanol and some of these advanced biofuels. But by and large, I think it was pretty much expected, and I think a lot of people will say they were happy with it. It's kind of at this point, it's provided some certainty. The RFS has had a lot of uncertainty in the past 8 years But this definitely, the timing of it, it came out on time. It pretty much stuck with what EPA has been saying, and I guess we'll go from there and see what happens.
Cellulosic was reduced from last year's number. Do you think this is a sign that that sector might be struggling?
Yeah, I think to some degree. We've heard about some breakthroughs. Poet up in South Dakota announced that they're getting closer to really making the plant in Emmitsburg, Iowa go like it's supposed to. But definitely there's been a bit of a difficulty getting the industry itself launched commercially. I think we're going to continue to see more of those things come online, more of those plants come online. Also, you're going to hear a lot more about cellulosic ethanol produced at corn ethanol plants across the country. A lot of plants, because of the enzymes they use, they produce a level of cellulosic ethanol. And I think some of that's going to kind of build into the volumes as we go. But clearly, cellulosic ethanol hasn't really met the expectations it had from the beginning.
The 15 billion gallons of corn-based ethanol, do you think that the industry feels it can safely reach above that?
Yeah, I think so. There's been some talk in recent years that perhaps if EPA decided to make some sort of adjustment to the RFS, that perhaps corn ethanol could in some way meet a lot of the demands of the RFS when it comes to cellulosic ethanol, greenhouse gas emissions and all that. And so whether EPA gets to that point is pretty much up in the air, but I think I think that going forward, not only the export markets for corn ethanol are important, but perhaps in a relook at the RFS itself.
Biodiesel certainly believes it can reach above its target, correct?
Absolutely. Our EPA set the number at 2.1 billion gallons for 2018, but all along the industry has said it can produce 2.5 billion, if not more. Not really sure about what's holding up EPA in that regard. I think there's probably still some concerns about imports and those sorts of things, how they might crowd out some of the domestic producers on the RFS and biodiesel. But clearly it's still a tough time for biodiesel because we're still talking about the potential renewal of a tax credit that expired a year ago. And when you keep talking about an RFS that kind of undersells biodiesel, it's still tough on them.
One of the important things the EPA also announced recently was that it would not change the point of obligation. Why is that important?
Well, clearly, one of the things that we hear about is that there are a lot of the people that the EPA wanted or was considering being the people who have to comply with the RFS are probably a lot of companies that couldn't afford necessarily the cost to comply. The thought was if you spread out the cost to thousands more obligated parties, that perhaps it would bring down the overall cost. But in a way, I think the ethanol industry thought that if they go that route, then you're going to see a lot of these people second guess whether they get involved in biofuels. And so I think I doubt that issue is going to come up a lot more because we've seen petitions, dating back a decade, asking EPA to change course, and it didn't even under the Obama administration.
Can you give me an overview of what you think the continued struggle will be over the RFS here in the future?
Yeah, I think we're moving towards some sort of a reform. Now, I don't know what that might entail. Quite honestly, right now, the corn and ethanol industries have a big pull in D.C. They've got, clearly President Trump was supported by corn country quite extensively. So I think the political pressure on the president is such that it'd be interesting to see if he would ever sign a bill that would reform the RFS. However, if there's some needed reforms that would actually benefit the industry, talking about allowing more E15 on a year-round basis, there's that kind of potential. Then when you talk about reform, that perhaps, maybe the ethanol industry at some point would want to do a little give and take.
You can find the final Renewable Fuel Standards for 2018 through a link on the Market Journal website. Nebraska's farmers grew the largest soybean crop in the state's history this year. If the USDA's November estimates hold, they also produced the fourth largest output in the country behind Illinois, Iowa, and Minnesota. The number this season surpasses the previous top set in 2016 and marks the state's fourth record in 4 years. To look ahead to 2018, we recently talked with Nebraska Extension plant pathologist Loren Giesler and asked how growers can use disease histories to choose varieties or alter their selections for next season.
That's probably the number one thing we talk about when we talk about disease management for many of our soil-borne diseases. So sudden death syndrome, brown stem rot, Phytophthora, those are kind of some key ones that we see that you can easily make a selection. So if you've got a few varieties of a grower has certain ones they're looking at and they know they have a history, for example, of sudden death syndrome. If there's somebody that has significant SDS, they've been trying to manage it for a while and they know this. But if you have any history of these and those varieties are close, then that's when I say make that switch over to that variety that has a little better resistance specifically, or even a tolerance score with that. We said quite a bit of Phytophthora this last year, and growers that have had experience with Phytophthora, really key to make sure you have a resistance gene, and then Phytophthora is also rated for tolerance among these varieties, which is different. And so a high tolerance score and any resistance gene has shown in a lot of research to be the best variety selection for those fields.
We'll talk about seed treatments in a second, but when it comes to populations, how can selecting the right population help you manage disease, or at least help you effectively and feasibly manage diseases?
Well, and that's a great question too, because populations, when we look at, for example, we've had white mold now for 4 years in a row. It's amazing, and not amazing for farmers, but amazing as a pathologist to see this happen so frequently, because historically it hasn't been in Nebraska. But with that one, higher populations, specifically row spacing. So closer row spacing can sure make a difference. So we always recommend going to 30-inch rows if they can in that situation. Widening out plant to plant, contact after infection can be high with higher populations. So another consideration with that, with it. And then when we talk populations too, when we get into seed treatments, very commonly recognize that the lower you go in your population, then the higher possibility of return with that seed treatment.
Do you recommend seed treatments for the next growing season?
Well, in general, so there's a couple things. I wish I had a crystal ball and I knew exactly what was going to happen, just like everyone. But if we're planting, earlier, which most farmers are, if we're going into conditions where we get heavy rains afterwards and such, or we have a history of significant stand problems, or we have a history of Phytophthora, or we have a history of sudden death syndrome, for example, those would be areas where we'd sure want to use a seed treatment. And when we look at our research over several years, really it's that seed treatment fungicide that's returning. We see the seed treatment fungicide insecticide combinations that a lot of people use, which can be effective, but that maximum return we typically see with just the fungicide. So that's a point that some people can cut if they want to, but it's so inexpensive most growers just put the whole combo on.
Planting date matters how?
Planting date is the biggest thing, with that push from the standpoint of lengthening your growing season, because when soybeans flower, obviously they flower at each node. So if you're in earlier and you have a couple nodes up on the neighbor, you're going to get more flowers and potentially more yield. It doesn't always translate into yield, but you increase your yield potential. And planting date is not really as important as soil temperature when we look at disease management. So we've had years where you could plant, mid-April, end of April, early May, and you've got 60-degree soil temps with the stochasticity we've seen. And then we've had those that we've had, 40, 48 degrees. So that's the biggest effect when I see an effect on seedling diseases.
Where can growers find more resources during the season?
A lot of great resources available. So we've got resources on the CropWatch website. There as well. Then the other resource that is really nice is the Crop Protection Network, and that's cropprotectionnetwork.org. That is a group of us that are extension pathologists from across the north central region. They get together and put publications that are really nice, high quality pieces that bring in a lot of different expertise and aspects. So winter's a great time to learn more, do some reading. I encourage them to visit that site as well.
Now with this week's weather forecast, here's Nebraska Extension ag climatologist Al Dutcher.
Well, folks, here again for the weekly forecast. And last week we talked about the Arctic air that was supposed to move into the eastern United States, and in fact, indeed played out almost as expected, except it shifted just a little bit toward the east. So we didn't see the intensity of cold in western Nebraska, but certainly we did see our first Arctic air intrusion, and we did actually see a little bit of light accumulations across northern Nebraska, particularly northwest and north central Nebraska, in the half-inch to inch range. Most of the heavier snowfall remained to the north with the blizzard activity across the Dakotas, and then on Wednesday night, we did see another frontal boundary passage with some light accumulations even farther south into southern and southeastern Nebraska. As we go through the next week, it looks like a fairly dry period for us, but we are going to entertain some cooler air moving in toward the latter end of next week. So let's take a look at the upper air models and see how this week will progress. The first thing we'll draw your attention to is that we have this large upper air trough that has moved to the east of us. Warm air starting to build in, so we're going to see a rebound in temperatures this weekend as high pressure is firmly in control from the northern Rockies all the way to the southern plains. That should allow our temperatures to move up into the 50+ range. Most of the heavy precipitation along the eastern seaboard. Look at an absence of precip in the center part of the country, and as we go into tomorrow, that jet starts to ease up a little bit over the Great Lakes. That's going to allow even warmer air to move into our region, so we could be looking at 50s across the north and 60s across the south. Fairly nice weekend. No precipitation expected whatsoever, but as we go into the day Monday, we start to see that trough trying to intensify and bring in a surge of cooler air that will start to drop our temperatures, particularly across eastern Nebraska, back to more normal temperatures in the 40s. High pressure still firmly in control across the entire western United States, so an absence of precipitation outside of some of the favorite areas of the southern Great Lakes region. And then as we go into Tuesday, that cold air starts to shift a little bit to our east, centered over Iowa. High pressure still firmly in control across most of the plains region, so we're going to see temperatures remain consistently within the 40-degree range, slightly above normal, with most of snowfall associated in the south of the Great Lakes region in the northeastern United States. As we get into the day Wednesday, we start a relaxation of this trough somewhat, so we might build a little bit warmer air in during the midweek period, but that's going to be temporary. We should return back to the upper 40s to low 50s. All the precipitation remains well to our east, and as we go into the day on Thursday, we see another piece of energy trying to dive southward. This might bring us another shot of cool air and a slight cool down as we go toward the end of the week. High pressure starts to move in from the western portions of Canada into the high plains region. No precipitation once again associated with this as this dry atmosphere, but our temperatures may break down into the low 40s. And on Friday, another renewed piece of energy moving right over the central United States kind of infiltrates that cold air into our region, and we may actually cool a few more degrees back into the low 40s to upper 30s, and we look like we're precipitation free. If we look out farther, 8 to 14 day forecast, it takes into account next Thursday to the following Tuesday. We see the renewed push of cool air keeping eastern Nebraska below normal, above normal to the west, and in terms of precipitation, starting to pick up on the potential for snowmaker as we get around the 20th of the month.
Thanks, Al. Today's interviews are available individually on the Market Journal website and through the Market Journal mobile app. They include information on cattle markets, crop price cycles, RFS volumes, and soybean disease management. As always, you can keep up with Market Journal during the week by following us on Facebook, Instagram, and Twitter. Next week, DTN's Todd Holtman will be our market analyst, and Nebraska Extension's Rodrigo Worley will discuss results from a dicamba survey conducted in Nebraska. Until then, thanks for watching. I'm Jeff Wilkerson. We'll see you next week.
Join Market Journal online at marketjournal.unl.edu. You can also follow us on Twitter, Instagram, and Facebook. Promotional support is provided by the Nebraska Farmer Magazine, and major funding for Market Journal is provided by the Nebraska Corn Board. Market Journal is produced by the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources.